Hey, what's up, my friends? It's so good to have you with me once again. So this week's video is gonna be a little bit special because we are not gonna do our usual market analysis, but rather I would rather empower you. I would rather teach you a few new things that you may not have come across before. So in this week's video, I'm going to share with you three little known ways you can trade with the trend. Alright, number one is you can just use moving average to identify trading opportunities. Number two, we talk about multiple time frames. And last but not least, number three, we talk about range markets and why you should pay attention to them. So yep, all this in this week's video. I hope you enjoyed it. With that, right, I'll see you over there. Alrighty, so this is the weekly chart of the US dollar against the African rand. So just want to highlight out a few points. So this is clearly in an uptrend, the African rand. And some of you are wondering, hey Rainer, how do I get on board such a beautiful trend like this? How do I trade this kind of nice trends? Because sometimes what I do is like, I like to plot out my resistance over here. I wait for price to come back, retest the previous resistance, now turn support. I wait for a bullish candlestick pattern to get long. But sometimes I just don't get the pattern. The pattern just doesn't form and I miss the move. Price then traded higher. Then over here, once again, I have this resistance over here. Then price, rally through the resistance and I'm waiting over here at this area for a bullish candlestick pattern for me to get long. But sometimes, price just doesn't come to the area that I'm waiting for. Or even when it does come to the area I'm waiting for, it does not give me the bullish candlestick pattern that I'm waiting for. So what can I do? Because I've missed countless number of trends like this. Does this sound familiar? Because honestly, I was once like this, in this state of my trading. So I just want to share with you one very simple thing that you can do to catch on board this trend. Very simple thing. Number one, just click on moving average over here and plot in your 20 period moving average. Number two, click the same period moving average, change it to 50 period moving average. Change it to blue color because that's what I usually do. Or you can set it any color you want. Just set a 20 and 50 period moving average. Put it on your charts. Now, does things look different right now? I'm sure you can agree that right now on this chart in your face, you can see clear historical patterns that you can trade. Clearly, the 20 and 50 period moving average that I've highlighted over here is acting as a dynamic support. Those are areas that you want to get long. So the market has shown you potential areas of value that you want to trade from. So what do you want to do? How do you enter the trade? Say for example, price starts retracing into this area. How are you going to enter the trade? Are you going to wait for a candlestick confirmation? Are you going to wait for an indicator to highlight to you that the market is going to trade higher? Or are you just simply going to queue a long position, a buy limit order at that area? So for me personally, what I do is that I would just queue a buy limit order in this area. I don't wait for a candlestick confirmation because clearly, historically speaking, over the last 2-3 years, the price has been respecting the 20 and 50 period moving average. It is confirming that this area is acting as a dynamic resistance, a dynamic support. Does this mean that this dynamic support will hold on forever? No, of course not. This is why I always emphasize on using a stop loss. You always place a stop loss in every trade, no matter how good the trading setup looks like. Because there is always the possibility of a loss whenever you put on a trade. So let's say, for example, price does retrace lower, back to near the 50 period moving average. Over here is E, I call it my entry. I'll put enter over there with a buy limit order. And over here, I'll put my stop loss. As simple as it is. Based on this chart, I know that there's a good chance that price will respect the dynamic support at the 20 and 50 period moving average. And if I'm wrong, I have a stop loss over here to get me out of the trade. And this is it. This is a simple way on how you can trade with the trend. You don't have to wait for any confirmation. You don't have to, look for areas where you think price may reverse. You just plot in the 20 and 50 period moving average and it will give you a clue to where price may potentially retrace to and, trade from there. So I'm not saying that it's wrong to wait for candlestick pattern confirmation, because if it's working for you, fair enough. But if it's something like, the problem that I've highlighted earlier, where you're always waiting and waiting and waiting, then perhaps you can consider another approach to trading the trend. So yep, that's my take on the dollar against the African rand. Hopefully it's something for you to think about. So now let's look at the dollar yen. So again, this is the weekly chart of the dollar yen, and basically I've plotted out the 20 and 50 period moving average. Because imagine if I just remove it on this chart, how do you think you're going to trade this chart off if you are, the 20 and 50 period moving average just isn't there? I'm guessing what you'll do is you highlight out this as a potential resistance, turn support, you wait for a confirmation down here before you get long, you draw another one over here, then you draw another one over here, you draw another one over here, and I can tell you just basically miss this entire move. Everything. So what you can do instead, let me share with you another idea, right? You put in the 20 period moving average. Again, I use red color. Don't ask me why I use red, because I kind of like the contrast between red and blue. So my 50 period moving average will be blue color. You can set black, pink, yellow, whatever you want. So down here, clearly, right, over the last few years, you notice that the 20 and 50 period moving average is acting as dynamic support. And say maybe, you know what, Rainer, I don't want to trade off the weekly charts, I know the weekly time frame is in a, uptrend, but I don't want to trade it off because my stop loss is too large, or I don't want to, wait so long for my trades to play out. So what can I do about it? So here's another idea for you. I'm sure you agree with me right now on the dollar yen, the weekly chart, price is in an uptrend, right? It's an uptrend. You have a series of higher highs, higher highs, higher highs, higher highs, higher highs, and higher lows that are here, 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 and here. I may miss out a few, but you get my point. So that aside, we both can conclude that the trend is towards the upside. So now what I can do go down is towards the 4-hour chart. And now on this 4-hour chart, there is another trading opportunity that you can consider. So what I see here on the 4-hour chart is that there is a potential resistance over here. We have a potential support over here. Just ignore this wick for a while. This spike down. So right now, that earlier we saw the weekly chart. The trend is up. It was near the 20 and 50 period moving average, a dynamic support. So if the trend, right, let's assume if the trend does continue, we could see further upside. So looking at this 4-hour chart right now, we see a potential that we see that the market is ranging in front of us. So there is a potential, if that price does break out of the range, the bullish momentum may continue, because we know that the higher time frame the trend is up, the bullish momentum may continue, and we can see price trading higher, retesting these highs over here. So on this 4-hour chart, now we have a bias. We have a clue to what price may possibly do, because we are trading aligned with the trend on the higher time frame. So what you can do on this time frame is to potentially trade a breakout towards the upside. You can place a buy stop order above here, place your stop loss of 2 ATR, and watch what the market does. It's a good trade if you ask me, because you are trading with the trend. You can't see the trend on this time frame, on this 4-hour chart. It looks like a range market. It looks like, in fact, a potential sell down. But you're smarter than that, because you went on to the higher time frame, the weekly chart, and you noticed the larger time frame is still in an uptrend. So on this 4-hour chart, there is a good chance that price may take out these highs over here. Now, then it trades higher and retest back this swing high over here. So looking at which, right, depending on how you want to trade this, you can take this from a trend following perspective, where you want to try and capture the trend, or you can take this as a swing trade, whereby you just trade the breakout over here, right, above this swing high, and look to take profits near the highs over here. That is basically your call, and something for you to consider. And last but not least, I want to share with you a market which is natural gas. Just look at this market, right? This is a market that I wouldn't trade. I'm a trend follower, and this is a market that I wouldn't trade from a trend following perspective. But does that mean that I ignore it totally? No, you don't do that. You always want to have a plan. A plan should something happen and you're ready for it. I see a mistake that most traders do is that, they don't have a plan. They only execute their trades when, they flick through their charts and they notice something exciting, or it could be something that is rallying up high, very high over the last few days, and that's where they enter a trade without a plan, and when the price pulls back, they either, blow up their trading account, or they lose a large percentage of their equity. But no, you're a trend follower, you're a professional trader, you are better than that. So here's what I want to highlight out to you. So clearly you see you have a resistance area over here. You have this support area over here. So pardon my this horrible looking line, but basically I was just highlighting out that this area is a resistance, this area is a support. So that aside, here is my plan, right? I'm a trend follower, I want to trade trends. So how do I go about doing this? So here's what I'll do. I've highlighted up my highs and the lows. So there are two ways you can approach this. Number one, if its price trades higher, taking out this swing high over here, what you can do is place a buy stop just above the highs and get long on this trade. Stop loss wise, you can, it's entirely up to you. I use basically 2 ATR for my stops. Basically 2 times the average true range, that is my stops. That's number one option that you can use to trade it. The second option on how you can trade this setup is basically wait for price to break above the resistance. Then it pulls back, forming a flag pattern for you. And then you queue your buy stop order above this new high, in anticipation that price will trade higher and then develop into a full-blown trend. That is another alternative that you can use to trade this current market on natural gas. But again, you have to be patient. You have to let the market decide on what it wants to do. And likewise, on the opposite end of the spectrum, you see, you can look to trade the downside by watching these lows over here, watching if it gets triggered. Whether the price, whether you want to trade it immediately when the lows are triggered, or you want to wait for a flag pattern towards the downside and then to trade lower once again. So as a trend trader, there are a few ways to tackle the trends. There are a multitude of ways, in fact. And the only way to know whether it works is you have a trading plan. A plan that dictates what you'll do exactly. Right? For example, if the market does this, I'll do A. If the market does this, I'll do B. But you have to write it out in the plan. You have to record it out in your journal. You have to be responsible for your trades. And then when you look back on over the last 50, 100, 200 trades, and you realize, hey, when I do this consistently, over time, I make money. And that's how you move forward towards being a consistently profitable trader. Not just flipping through your charts and finding trading setups or finding the next big thing. It doesn't work that way. Right? You always have to have a plan. And hopefully, these three financial products that I shared with you earlier, right? Hopefully it gives you some idea on how you can go about it. So yeah, I hope this has been insightful for you. So, if there's any questions, any queries you have, just feel free to leave in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.